I'm telling you, dude, our generation is so screwed. Nobody is going to be able to own a house. Everything is so expensive. Groceries are expensive. Rent is expensive. Nobody wants to be in a committed long-term relationship because everybody has trust issues and commitment issues. And everything's just overall expensive. But make sure you pay your taxes.
The economy has fallen, and mainstream media lied about the health of the economy in order to create a spend to the end narrative. Now, today, we're going to cover the economy. Then we're going to talk about how cooked the housing market really is. And did you all know that in San Antonio, Texas, the property tax delinquency rate is over 15% of all properties? And in Jackson, Mississippi, the property tax delinquency rate is 14%. Homeowners are going bankrupt trying to afford to stay a homeowner. And because of the fraudulent system, being a homeowner now means becoming a financial slave to debt unless you know how to conquer that debt. Now we're going to end this video talking about the new amicus to the Supreme Court of Texas and a call of action to the people. And now this is to everyone that's listening. You are the hope for change, and we are pleading with you for help. Now, having said that, happy Tuesday. Welcome back to Real Estate Mindset. You guys already know this video is going to be absolutely bonkers. And before even asking Mitch how he's doing this evening, I first want to talk about the comments that are saying the economy is fine because we reached an all-time record high in the stock market. To those people that are saying that, look at the historical surge in silver. Silver right now is $42.81 an ounce. And then when we look at gold, and this is as of the recording this video, gold is also at an all-time record high of $3,723. And metals hitting all-time record highs. I mean, seriously, guys, what does that tell you about the economy? Does it tell you the economy is doing good? And as far as like the economy is fine, we're at an all-time record high, look at the chart of the Dow Jones going back to 1995. Now, what I'm highlighting right here is December of 1999, because in December of 1999, they also hit a record high. And 1 month later, they had the dot-com bubble crash. So if that's the narrative you're going to stick by, you're going to lose everyone their money, because the stock market went down for years after that. And it took about 6 years for the stock market to rebound. And the same thing happened in November of 2007. Look at, guys, you see on your screen, we hit an all-time record high. But 1 month later, we went into recession called the global financial crisis, and the stock market plunged and again took about 6 years to recover. Mitch, having said all of that, sir, good evening. How are you today?
It's been, again, a very interesting few days, but we're about to go through an article that is stupid by the virtue of the way it was written. And to Travis's point, I want to come back and make one very clear statement. The economy is mom and pop. It is not Wall Street. If you hurt mom and pop, you destroy Wall Street. And the article that we're about to get into is void of any discussion of debt, interest payments on the debt, home affordability, property tax fraud, and bond fraud, all of which touch every single property owner in the United States, and all of which touch every single citizen in the United States, as well as Canada.
That's right.
The point being that the economy is mom and pop. Destroy mom and pop, you destroy everything, including Wall Street.
That's right. And nevertheless, Mitch, let's go into the mainstream media narrative now. We're going to read an article that came out Monday, September 15th from Zero Hedge, shockingly titled, "The Fed Models Were Wrong About the U.S. Economy." And this article is not what you think it is. So what I'm going to do is, as I'm reading this article, you guys see to the right here, this is the deficit. So this is the fiscal deficit, and it's not even over. And right now, in just deficit, this is money that we don't have over the last 11 to 10 months, $1.97 trillion in fake make-believe money. And also, don't forget, the national debt is skyrocketing, and it has been skyrocketing since about 2007. Look at this. So as I'm reading this, I want you guys to remember why we're at an all-time high. And it's because of the screen on the right. But regardless, let's read this and let's pick this apart and see what the mainstream media is telling people in 2025, the mainstream Keynesian narrative that the United States would inevitably experience a recession and stagflation has proven to be utterly incorrect. But again, I would disagree. Look to the right of the screen. The American economy is performing much better than its comparable nations, is showing broad-based strength and even has indications of accelerated growth, giving investors and consumers plenty of reason to feel more optimistic despite the consensus estimates from earlier this year. The consensus were wrong. I'm going to circle this here again, the 1.97 trillion. The United States economy is outperforming the economies of the UK, Germany, France, Italy, and Japan, who all have our debt, by the way, and then the entire euro area, showing estimates of economic growth that exceeded those of the best performing developed nations. But they're rioting and protesting, and there's on the verge of civil war right now. They're leaving that part out, along with significantly lower unemployment rates and solid real wage growth. I guess those protests are just for no reason then, right? Everything's okay, according to this. Due to exaggerated expectations of the impacts of factors like new tariffs, global uncertainty, and the potential for persistently high inflation, most mainstream analysts and market competitors projected a stagnant or recessionary environment for the U.S. in 2025. The mainstream consensus predictions were biased and incorrect. Rather, the U.S. economy has reported strong real GDP following a short contraction in Q1. Growth in the second quarter bounced back to 3.3% annually, and the Atlantic Fed's GDP Now model correctly projects Q3 growth at a stable 3% pace. In addition to consumer spending and imports, business investments also contributed to this GDP strength, and more importantly, it came with government spending under control. I'm going to just read that again, you guys. Okay, look to the right here. Okay, and let's pull this one up too. Okay, see this? Okay, put that back here. I'm going to read this again. It came with government spending under control. The most recent CPI and PPI data dispel concerns that the tariff regime is causing inflation. CPI and core measures in August came in close to or below expectations, indicating that headline monthly inflation and producer price increases are still under control. What are they talking about? Prices for durable and non-durable goods are still stable, and despite negative forecasts, tariffs have not generated a significant increase in the cost of living for Americans. Instead, energy and important imports have either decreased or stabilized. Despite recent revisions, which are the biggest in history, by the way, the private sector labor market maintained momentum from January through August if they're going to use corrupt data. So they're using data that they know is going to be changed. The significant negative revisions occurred during January and December of 2024, indicating that the Biden administration jobs creation was only half of what was reported and required a 2 million downward adjustment to the job figures from 2023 to 2024. What the Bureau of Labor Statistics has shown clearly is that the United States was in a private sector recession in 2024, which justified the negative sentiment from citizens. Private payrolls have reported consistent net gains, particularly in the important service and construction segments, despite slight revisions to previous month. Even more encouraging is the fact that real wage growth is accelerating rather than merely keeping up with inflation. Real average hourly wages increased by 1.2%, and real weekly earnings increased by 1.4% between July 2024 and July 2025, so year over year. Increased purchasing power is boosting middle class disposable income and driving retail demand because wage gains are outpacing price growth, but they aren't talking about credit card debt and the buy now, pay later crisis. If we take away just the money spent on credit cards and buy now, pay later, none of this growth would be here. And this author is conveniently leaving that out. Despite the pessimistic predictions of recession and stagflation, again, look to the right of your screen here, they have proven to be undoubtedly wrong. The U.S. economy is in a period of true private sector expansion thanks to strong job and wage growth, favorable taxation and deregulation, whereas tariffs are having no real impact on inflation. Now the Fed needs to be truly data dependent, putting aside the pessimism of the previous year. The data currently indicates an improving outlook and a recovery from the private sector recession and a fiscal mess inherited in 2024. 4. Another thing that was inherited over the last couple of years is the reverse repo market, which allows banks to continue to leverage their liquidity. And I wanted to show you guys, it's interesting. This is all the way down to $16.9 billion. It was over $2 trillion at one point. So this is sinking fast. It's probably to create a narrative. And another thing, you guys, here's what people don't realize. Look at how much money the Treasury has right now. It's the bankers are rich still. The elites are rich still. Look at this. The Treasury is sitting at 667 billion. Before lockdowns, look at this. The average was 300 to 400. Since when did the Treasury need so much money in their Treasury general account? On top of that, you guys, the 10-year and the 3-month Treasury is still inverted by 0.01 basis point. The UBS puts the U.S. at a 93% risk of the economy dipping into recession. And before moving to Mitch with my question, let's first listen to an average everyday American that's in the labor market that's talking about how he feels the economy is treating him and his life.
The irony of modern life today. Do we really enjoy our lives anymore? We spend so much time trying to make money just to own future things, to own a better car, to own a better house, whatever, to buy better clothes, whatever people do. But we don't really get to enjoy the moment. We don't really get to enjoy the time. We don't have that much time on this planet, and we don't really enjoy it because we're so wrapped up in trying to make money, trying to please employers, trying to keep up with the Joneses, all that stuff. In your goal to make so much money and to work so hard, you end up getting all these diseases. You get hypertension, you suffer from stress, you get diabetes, you get all these things because you're not eating well. You're not focused on the right things in life. So then you got to spend all that money one day just to keep from dying because you're sick. You're going to get all kinds of diseases. Now you got to worry about all the diseases you got because you never lived your life the right way. It's just a strange place. I feel like everything us humans do now is unnatural. It's not natural.
Inflation is unnatural and it's systemic. It is literally a hidden tax that robs us of our American dreams. Mitch, my question to you, sir, is regarding the author and that paper. How can someone be so smart but so stupid at the same time?
The document is probably one of those reasons why you can't trust AI. And every time you look at an AI article, you have to analyze it. A human being has to go through it to figure out what's true and not true. The stock market can stay strong and long and take out the shorts. That's not unusual. That's a stock market condition, but it's not reflective of the issues affecting mom and pop. And those issues I went through before, including the home affordability, the fraudulent property tax, and the bond fraud. Shorting the stock at this moment, or shorting the stock market at this moment, doesn't make a lot of sense. For those who are interested, simply hold your powder dry. The opportunity is coming, and we're going to go through in a few minutes what the proof of that opportunity is going to lead. You're going to see it before it actually happens. The piece in Zero Hedge is pure propaganda. It's wrong in its premise. In Zero Hedge, as the editor, should do a better job and require the backup for such nonsensical statements. I'm a fan of Zero Hedge, make no mistake. However, Tyler, what are you doing? You're not protecting your brand by allowing that type of nonsense in because it doesn't tell the truth. You've got to do a better job. That's all I have to say as far as Zero Hedge is concerned.
Can you go into talking about how potentially if people maintain their purchasing power and we maintain liquidity, how we could potentially make a ton of money through the stock market crashing? Can you go in a little bit more into how you plan on doing that? Because obviously we're going to take the viewers with us once that time is here. But explain to them how you can make a killing. You could become, I hate to use this word, filthy rich by playing the market right. Can you explain that?
We're proponents of giving people the option to learn how to trade. And you can do it through options and you can do it through futures, but you need training. You need education. Getting that education, we've been pounding the table on this for really 10 months. There are good sources, great sources, So one of those sources would be Tasty Trade to learn how to trade options. They're not good on technicals, such as what would be happening on an intraday basis. But from a standpoint of trading options on a swing trade and learning how to do those options, there's nothing to stop you from making 30%, 100%, 200% return on the trades when they're properly set up. What I'm a fan of is taking the technicals and combining it with the fundamentals and the options, so you can look at a chart and pick your spot as to where you want to enter with the best risk to reward. With all that said, it still takes training. You've got to get educated. Options is a good thing to get educated on. There's a fellow by the name of Dr. Al Brooks, and if you go and look at his training on how to trade bar by bar, that is the technicals, that's the chart patterns. Combine the options with the chart patterns, you can trade intraday or you can do swing trading. How foolish would it be for anybody to say, well, the market is going to keep running? There's no proof of this. Now you can look at an options and say, well, within the next 45 days, the market has a probability of X occurring. That's fine because you're using the options to quantify your position. But taking a position just based on, well, the wind is blowing to the west is not a position. It's a fool's errand. You've got to be able to quantify what it is that you're doing. The best risk to reward are actually chartable. And we're going to get into that in due time as to what to look for. But the point of the matter is most mom and pop right now are living paycheck to paycheck. There's no spare cash. You know, for those who have spare cash, go learn. Even for mom and pop, if you can scrape it together, learning is the ultimate weapon to protect yourself. You've got something that you can do outside of working for somebody else. These things are all coming, and in a few minutes, we're going to get through a handful of things so you can see this coming in advance. And it is in the form of the bond fraud. It is in the form of the compound cumulative interest that mom and pop can't pay for. When you have a house in Argyle, Texas, it's got $343,000 in outstanding fraudulent school district bond debt. Never mind the compound cumulative interest of the cost of that fraud into the future. And the median household value is 450 grand. Where exactly is the money going to come from to pay for it? That is our case in a nutshell. That money doesn't exist. Well, if the money doesn't exist, de facto, fraud has been created at the central appraisal districts and at the school districts. That's what this is about. When the bond market starts cratering and gets the idea of what's going on here, that there is no money to pay for it, look out below. That's when you make the move and you short everything in sight. Everything in sight being, in this case, the indexes, because they will go down and they will drop dramatically.
Speaking of dropping dramatically, let's move into the housing market section now. And I'm going to start this. And by the way, this is a huge deep dive. This is going to be so good, you guys. We're going to go over inventory prices, and we're going to show you guys how much insurance has gone up. And we're going to show you the massive crisis that's happening right now that nobody's talking about with property tax delinquency. Some of these numbers are going to blow your mind. But before I do that, we're going to listen to a homeowner who can't sell her house. She's the lowest priced on the block, and she still can't sell. And now she's worried that she's going to have to drop the price under for what she bought it for. And I want you to listen to her and realize that after she bought the house, they also completely upgraded everything. So I'm wondering, how much money is she really going to lose?
Day 143 of trying to sell our house, and everybody's saying it's the price. It's not the price. When we originally listed it, our price was fantastic, and we've lowered it 3 more times since then, right? It would be ridiculous to lower it anymore. I mean, we've only been in this house for 2 years, and we're getting pretty close to like our purchase price at this point. And other houses around us have sold, but just not many because of the price range we're in. It's probably the marketing. So what we're doing this week is completely redoing our whole listing, professional photos, drone shot, the Matterport, like the 3D virtual tour thing, like all the things. We didn't do any of that at the beginning because we've never sold a house before. We didn't think that mattered that much because we have a nice house. And when we bought it, we completely updated everything except the bathrooms, which aren't that bad. They're just clearly the original bathroom. But we completely remodeled like our kitchen and put in this really nice pantry and new flooring, new paint. It has a really big, nice pool. It's a really nice house. Just the kind of buyers looking for the kind of house that we have, just not very many of them out there right now.
Why do they put so much money into their house and they moved in 2 years? That makes no sense to me. Why would you do that? And then I'm going to tell you right now, okay, it's not the marketing. If your house has been on the market for over 100 days, then you did not have your price right. Okay, like she thinks she did. The only way that she's going to sell her house is to continue to drop the price until someone can afford the house. And the buyers that apparently aren't there, it's because they can't afford it. Without question, home prices are going down in many metro areas, but there's also other metro areas where home prices are not going down. What you guys see here is the year-over-year price appreciation or price decline. And I want you to understand that it is incredibly bifurcated. In the Northeast, houses are still going up. The leading metro right now is Cape Coral, Florida, down 9.2%, Northport, Florida, down 8.4%, Austin, down 4.6%. Leading metros include Syracuse, New York, up 8.4%, Scranton, PA, up 7.5%, and Bridgeport, Connecticut, up 6.9%. So the housing market is incredibly bifurcated. Inventory is going up. So this means that supply is outpacing demand overall. Even though we haven't necessarily seen that in average prices of houses, we have certainly seen prices go down in some metro areas, but almost every metro has increasing inventory. Not everyone, but almost everyone. You guys can see that we are now over pre-pandemic inventory, but not much. And I also want to warn you that we're now going into times where traditionally inventory starts going down. So it's going to be interesting to keep our eyes on active existing inventory. When we look at new home inventory, it's absolutely skyrocketing. They don't even know what to do with all these houses. They have so many houses that are just sitting, collecting dirt right now. They got to be pulling their hair out. They cannot sell these houses even at 2% interest rates, 3% interest rates, $50,000 price cuts, paying all the closing costs, ridiculous incentives. These new home builders still can't sell their house. And we see that because of this data showing that there is 9.2 months of supply. The median sales price of new houses is going down, showing that it's down almost 10% right now. But remember, you guys, this got up to 500,000. They edited this data. So really the prices of new homes right now should be down 90,000 because remember, they peaked at 500,000. It's not just home prices that's causing so much pandemonium in the housing market. It's also things like property taxes and property insurance. So I want to start with property insurance and I want to show you guys what's really happening because we have a property insurance crisis going on right now. Property insurance costs continue to press higher over the first half of 2025, with the average insurance payment on mortgage single-family residence rising 4.9% in just half a year for 2025. That's lower than the 7.3% gain for the first 6 months of 2024. It was even worse last year, but it pushes property insurance costs in the US to yet another record high, climbing by more than 11.3% for the same time period last year. This is showing you guys the increase over 6 months, and you can't really see in the middle here, but the middle is over 1 year, and the blue is since 2019. Insurance is up 69% since 2019. 69%. And I want you to comment below and tell me how many of you think that that's not only a result of the overvalued houses, but the overwhelming amount of natural disasters. Now, in 6 months, the average insurance cost 4.9%. Over the last year, 11.3%. Insurance costs are skyrocketing, especially look at California. The West Coast is getting absolutely hammered. These are percentage increases over the first 6 months of the year. So this is just from December to June. Essentially what happened in Texas is they removed affordability out of the housing market for various reasons, and the same thing is happening in the North and Northeast. They're passing on the risk of other states to this area because they aren't maxed out yet. I'm going to show you guys 6 different metro areas that have massive property tax delinquencies. And the way I'm going to do that is I'm going to use Property Radar, and I'm going to select only single-family residence, condo, multifamily 2 to 4, and other residential real estate. So I'm removing business and commercial property. And when I add that filter on here, this is reporting for the entire United States, 114 million properties. Okay, so 114 million properties, of which 3.2 million are tax delinquent. So I wanted to start with a baseline. The national tax delinquency rate is 2.8%. But watch how it goes up when I select only free and clear properties. And the reason why I only want to select free and clear properties is because it's the highest likelihood to show us senior citizens, because a lot of senior citizens have their house paid off. And what I want to show you guys is how property taxes are actually adversely harming senior citizens. Now, when I go to free and clear, that removes all of the mortgage properties and it condenses it down to 53 million properties. You guys see that here, of which almost 2 million are delinquent. So the property tax delinquency rate goes from 2.8 to 3.7% when we're only looking at free and clear property. Looking at only New York, this is counting 267,000 properties, of which 17,850 families and homeowners are currently delinquent on their taxes. That means for this area, the tax delinquency rate is shockingly 6.6%. Looking at Los Angeles, there are 343,000 different residential properties, of which there are 25,000, wrap your mind around that for a second, 25,333 families that are currently tax delinquent, which equals a shocking 7.3% of all residential property in Los Angeles County right now are behind on their property taxes. This is Akron, Ohio. Total amount of properties is 82,023. Total amount of those properties that are tax delinquent is 6,452 homes. A tax delinquency rate of 7.8%. Let's not forget New Jersey, and I figured we would look at the metro that I love pronouncing, which is Newark. They're sitting with a total of 32,407 properties, okay, of which 2,589 of them are tax delinquent, which means 7.9% of these properties are behind on their taxes. These next two, you're gonna want to sit down because they are astronomically higher. Now, here's Jackson, Mississippi. Right now, this is calculating 53,959 properties, of which, okay, 7,749 properties are currently behind on their taxes, meaning over 14% of these homes, over 14% are tax delinquent and at risk of foreclosure. Let's take a look at San Antonio. This is the worst metro that I found, and this is substantially worse than any other metro in Texas that I've reviewed anyways. In San Antonio, there is 578,000 residential properties, okay, of which, and again, try to wrap your mind around this for a second. Literally, think of these people, think of these families that are on the verge of foreclosure. 89,367 homes are currently behind on their taxes in San Antonio. A tax delinquency rate of 15.4%. I want to play you guys this video because my question for Mitch is should we abandon our goals of home ownership?
There are more unemployed people in the US than there are jobs available. Let me repeat that. There are more people that are unemployed in the United States of America than there are jobs available. I am one of those unemployed people. If you are also one of these 7+ million Americans that are unemployed right now, take this as your sign to go after your dreams, because at this point you have an equal or even better chance of making your dreams come true and building something for yourself that is more sustainable, more fulfilling, and will have a higher ROI than finding a job in this current market. What do you have to lose? You already lost your job, babe. Why not invest into yourself, your career, your future by doing something that actually makes you happy?
Mitch, that last lady, I thought she had some points there. I wish we could do something that would make us happy. I mean, isn't that the American dream? Life, liberty, and the pursuit of happiness? It doesn't seem like we have that opportunity anymore. So Mitch, my question to you is should we shift our dreams, maybe temporarily, right? But should we shift our dreams of home ownership and maybe go after something else? Like she's suggesting self-employed business. What do you think about shifting our dreams? Because there are a lot of, especially Generation Z and even the middle class, that have been on the sidelines waiting to buy a home. Now, I'm not shifting my dream. My dream, I am hyper-focused on buying a house. I look every single day. But what about other people? Should they shift their dreams?
In order to answer the question, you have to really stack what we've actually been discussing so far this morning. So there's several issues. The lady selling her house, all real estate is local, which means it's quantifiable. It is the price per square foot and the median household income in that geographic area that will make the difference to her. Nothing else matters, the median household income and the price per square foot. So when she went and she listed the house, there's a high probability that the realtor shot high on the value in order to get the listing, convincing that person that, oh, well, just give me the listing, I'll get you this price. Well, the realtor can't deliver. That's fairy dust. They can't do it. So they work their way down in price, but the problem is the longer the house sits on the market, the more it hurts the seller. That's one of the elements that has to be taken into consideration. The insurance policies, which Travis raised, generally speaking, based on probability, most insurance policies are 85% overpriced. Now, it gets worse when you realize that the insurance companies rely on the central appraisal districts, which we have proven have committed fraud in their overvaluation and overtaxation. Well, the insurance companies are utilizing that fraudulent overvaluation. Second element. The third element has to do with the real estate tax delinquencies that Travis just touched on, and that doesn't take into account the credit card debt, the car payments, the cost of living, the cost of food, and the cost of medicine by virtue of the inflation. It doesn't take into account that roughly 8.7% of the gross income, average gross income, goes to property tax. Think of that for a second. Roughly 8.7% of all properties, gross income on average, goes to the property tax. It's not the mill rate. It's how much of your income is going to pay the property tax. The real estate tax delinquency is just one line item that leads to a tax lien foreclosure, and the tax lien foreclosure wouldn't exist but for the property tax. In other words, repeal the property tax and you eliminate the ability to have a tax lien foreclosure. With regard to the main question, should people abandon the idea of getting a house? No. Abandon the politicians that participated in the scheme and insist on their prosecution. This is a problem. They have effectively destroyed the American dream of home ownership. It is within our ability as a society to take it back. That's why we're doing what we're doing. We're proving the fraud. We're laying this out for everybody to see, including the government at the federal level. People have to have a right and a will to get up in the morning and do something good for society. That's what society is based on. These people at the World Economic Forum, every stitch of their funding and every stitch of their dollars should be prohibited by the federal government. They should be shut down en masse, effective immediately, because you're seeing these problems play out. This is why mom and pop don't have any money. It is these people who have promoted the theft through the property taxation, while everything is just fine, just like you saw in that article in Zero Hedge. No, everything is not just fine. These politicians who did this have got to be shown the door. If it means that they are prosecuted for their actions by not delivering, i.e. the Attorney General of the state of Texas under the Freedom of Information Act, if they're not going to do their job, then the SEC should walk in and simply say, turn these documents over. And if you don't, by virtue of subpoena, we're going to arrest you on the spot. The gamesmanship has got to stop. This stuff is going to end up in a very, very bad place if legitimate people don't have the right to fix these problems. We have the right to be heard in court. That's what we're asking the Texas Supreme Court to do. Let us roll forward and present this case based on the facts and based on the merits.
The Amicus Brief in the Supreme Court of Texas. This is a brand new document. It's 84 pages. We're not going to read this on this video. Mitch and I are doing lives twice a week, and we're going over almost every single page of this. So in the yellow is what we've already covered on Monday. On Friday, we're going to cover what's in green. But basically, you guys, I took all of this information and I tried the best I could to put it on one page. So what I'm going to do is I'm going to read this one page. I'm going to show you guys a letter of support that I sent to the Supreme Court to try to get them to support Mitch Vexler and all the things he's doing. Now, I want you guys to take this document right here. It's going to be linked in the description. And I want you to give this to anyone that doesn't understand what's going on with property taxes, including the politicians, because this pretty much sums up a lot of what the problem is and what the solution may be. Why abolish property taxes? Now, the first thing, obviously, it's a violation of the 16th Amendment, but a few bullet points here. First of all, people are taxed out of their homes, and this adversely impacts senior citizens with homes paid off. I showed you that with the data at the beginning of this video. Number two, it's also financially bankrupting homeowners, forcing them to sell their houses and move. Number three, young adults are priced out of home ownership. The software helps set the floor on home prices. Number four, you will never own, nor will you have the opportunity to own the roof over your head. And that may be the biggest thing of all. Number five, equity is stolen. For example, the property tax rate on my house, this is real, it's actually higher than this, is 3.5%, which means if my home doesn't go up over 3.5% a year, then all of my equity was stolen from the Central Appraisal District. Property taxes are a mechanism to fund fraudulent ISD bonds. Now, I made an error, guys. I said that counties don't have the ability to print money. That's wrong. Counties do have the ability to print money, just like the Federal Reserve is called bonds. And the predominant amount of those bonds is from the ISD, Independent School District. Understanding the 2008 style ISD bond crisis, and as an example, in May of 2025, Salina ISD was able to pass $2.27 billion in bonds. There's approximately 9,377 households in Salina, Texas, which means in just that 1 year, they have drowned these homeowners with $242,000 in debt per household that they are responsible for paying back. Bullet point number one, bonds do not pay teacher salary or any M&Os, which are maintenance and ordinance. The bonds don't pay for any of that. The bonds, that money does not go towards the classroom or the students or their education. Large amounts of ISD bonds are purchased through teacher pensions and 401ks. Did y'all know that? Do y'all see the Ponzi scheme here? Large amounts of ISD bonds are purchased by institutions as a collateral requirement, and then they lever those up potentially 40 to 1. AAA credit rating, okay, from Fitch is based on unlimited ad valorem taxes. Unlimited? No fundamentals there. Bond debt has skyrocketed up and mathematically cannot be paid back as a requirement in law. The underwriting isn't based on fundamental math. ISD bonds are insolvent, which has bankrupted cities, schools, and property owners. The compound interest to service $2 billion in bonds, because remember, depending on the bond, they don't even pay principal. And the interest is compounding. So if they're not paying the principal, understand that the compounding interest on $2 billion could be $5 billion in extra costs. Third talking point, there's no recourse or due process. Our property rights are gone. This is a violation of the 5th and 14th Amendment to the U.S. Constitution as far as due process. The Central Appraisal District, which is the CAD, is responsible for accurately valuing our homes to tax. Now, the ARB, which is the Appraisal Review Board, is supposed to support property owners in protesting their home value when a property owner does not agree with the CAD's home value. The CADs often use a renegade value software that falls out of legal requirements in order to back a budget into home value. This allows the CAD to achieve higher revenue. The ARB is supposed to support us, but they're not. They're assault and battering us, and then they're lying about it. I know that because it happened to me and I have an active case open. The CAD and ARB are working together, often to bully and confuse homeowners into accepting an overvaluation. And the example is the charges that were filed with MCAD and the fact that we were able to reduce someone's property $250,000 from $383,000 all the way down to $131,000. How do you justify that type of overvaluation from the software? How do you justify that? $250,000? Come on, guys. The CAD and ISD claim immunity, but there is no immunity from fraud. The protest process is not fair, uniform, and equal as required by law. All past and future data has been corrupted by using value software that allows for fraud. Let's talk about the solution now. The Texas solution, anyways, the people's bill that Mitch made will conquer this problem. What this bill does is it immediately ends all property taxes. Unfortunately, because of the bonds, direct result because of the bonds, sales tax, people need to understand this, guys. The math is ugly, but it is the math. Sales tax goes up to 15% for 3 years till stabilization and 0 ISD bond debt. Then it goes back down to 11 to 12%. So the only need for the increased 15% is because there's bond debt and we have to pay that off. We can't just act like it doesn't exist like every other tax bill that's out there. There is no impact on food or medicine except for potential deflation, which is prices going down. This also stops all bonds and requires ISDs turn over all accounting QSIPs within 60 days. So we're holding them accountable. It's in the bill. Within 60 days, the ISD must prove the ability to repay the bonds over 3 years or face immediate bankruptcy. This eliminates billions of dollars in agency waste, fraud, and abuse, reducing the revenues needed to even function. This puts money back into the classroom and promotes quality teachers and higher teacher pay. This also requires transparency to the public. The state comptroller has to track every dollar through a check register that's visible to the public. If you guys support all of those things, we're asking you guys to please write a letter of support to Blake Hawthorne, the clerk of the court for the Supreme Court of Texas. The address is here. Here's the case number. Here's what I said. I basically just broke down why I agree with the amicus and what has happened to me as far as property taxes. And you guys, all of this is in the description. So we are asking you guys for your help. This is a template. Send this right now to the superintendent and the school board in your district. We need you guys to send us the response because we're going to turn that response into the SEC, but it's so important that you guys understand that this is what you guys need to do right now in order to create a change. Mitch, I know the amicus was an 84-page document. It's going to be linked in the description. I know we're asking for the viewers' support, send a letter of support. I know we're asking them to send that Freedom of Information Act to their school board, but can you sum up the amicus and can you also create a call of action to the viewers and let them know how we need their help?
There's a whole other section, and we'll get into it in another video. I want everybody to know that when we do these videos, there's never enough time to get everything out. And we share what we learn literally as fast as we learn it. So there's going to be in the upcoming video a whole section on the proof that is required and what we have versus what the CADs and the school districts have. We'll also get into a section called the prayer, which is also in the amicus. There's quite a bit in there, and for those who have the inclination, that amicus across the United States lays the groundwork necessary, not just for the Supreme Court of Texas to act, but for every court across the United States to act, because the pattern and practice is absolutely clear across the United States. With regard to the Freedom of Information Act, there's 4 line items in there, but this is applicable across the United States as well. So for those people who are having issues with their school districts and those real estate tax frauds that are being created upon them, you should go to your school district and simply say, under the Freedom of Information Act, please deliver the following. There's a high probability those 4 items, they will do exactly what the Attorney General of the state of Texas did, which is a general denial and say, we are not the repository of the documents. The problem is, yes, you are the Attorney General under Chapter 46 here in the state of Texas, but so is every other Attorney General in every other state responsible for enforcing the laws of that state. That's where this is headed. The Attorney General's office has in fact admitted they're guilty. They didn't do their job. Travis just put up for everybody to see the response from the Attorney General. Well, not only did the Attorney General's office not do its job, either did the state comptroller, either did the state auditor, TDLR, TALCB, IAAO, TAAO. None of these entities have done their job. They're literally claiming no enforcement. They are literally pointing the finger at each other. Well, if they're that grossly incompetent, then it comes right back to what I said before. Why are they in office? These people need to be shown the door and prosecuted. To that point, we will show shortly, it'll be on my website probably within the hour, a letter that went to the SEC themselves in Washington asking the SEC to send their amicus to the Texas Supreme Court and asking the SEC, by virtue of all the evidence we presented, to get involved and go after the Attorney General. Travis just pulled up the letter that I sent to him this morning, but the actual letter itself will be posted on our website, as I said. And it's very important that as a property owner, if you take the information through that Freedom of Information Act form and send it to your school district, and your school district responds with the same type of nonsense, please send that to us, because we're proving to the SEC that this is a systemic problem. This is a problem across the United States of America, not just Texas. Texas is where we started, but the amount of evidence that we are gaining by the day is absolutely monumental. And those Freedom of Information Act requests and their subsequent denial from the school districts is important. It's one of the things that you can do that doesn't cost any money, but has massive ramifications, because it proves the systemic fraud, the bond fraud created at the hands of your local school district. This is where the SEC has to get involved on a federal level, because the bonds are national. The bonds touch mom and pop's pension, your 401k. The bonds are in the banks. They're everywhere. The point is, the SEC, by not getting involved, if that was the case, wouldn't be doing their job, and in fact, would be promoting the eventual collapse of the system. So we're right back to Zero Hedge article. While the economy is fine. No, you're delusional. The economy isn't fine. Mom and pop needs help. Mom and pop needs protection. The laws exist to protect the citizens. My case to the Texas Supreme Court, does the law exist or not? We see the black letter of the law, it exists, but its lack of enforcement begs the question, why is there a lack of enforcement, and who's getting the money? How much are they getting? And how many crimes have they committed in the process of getting it? What did you know, and when did you know it?
They've been robbing us for, I don't know, decades. And I wanted to remind you guys, if you want to go into the Amicus, if you want us to go page by page of the Amicus, don't forget, for the next month, Mitch and I are doing a live video twice a week. And in those live videos, we will be reading one page at a time of the Amicus. So don't forget that, you guys. And also don't forget this, you are the hope. If you're listening to this right now, that means there's a reason why you're listening to this. There's something in your heart, something in your mind, but I want you to understand how important you are, and I want you to understand how much we need your help. Now, other than that, guys, comment below, reach out to us, and email, follow the links, and understand your value. And if you're out there investing in real estate, in the economy, just trying to figure things out, you guys already know we wish you luck, and we hope you win.